So what's going on in the insurance market right now is general inflation that we're all aware of now, right? There's also the cost of reinsurance. Then we also have an uptick in weather events that we've been all hearing about.
So these insurance companies have to have their pricing approved by these regulatory agencies in California.
Yeah, correct.
That's correct.
Yeah.
Okay. And that was part of the cause you've stated of why insurance rates went so high and why some insurers are leaving California. Is that correct?
Right. So expound on that a little bit. So the other thing that's happened is as a result of inflation, they've increased interest rates. So now you have this liquidity whoosh that was there, could have gotten historically a great return or a normal, stable return on investment in the insurance industry. That's not happening now. But hey, I can take my money down and get government bonds and I can get a great return. So all of a sudden, the amount of money that's there for insurance is not as significant, and that's driving capacity problems. We don't have enough liquidity in the market to really insure everything.
And well, Erik Motzenbacher is here with us today. He's the owner of Pacific Premier Insurance. He's a friend. I've known him maybe a couple years now or so. We've been working together. He does all of our business insurance at Good Life and my personal insurance. And I'm super excited to have him on the show because he made insurance easy for us. And that's a big deal to me because my whole life is focused around making owning rental property easy for people. And, you know, we can get into that. But yeah, he just has a great organization, great company. And I'm excited to welcome you to the show. What's up, Erik?
Thanks for having me.
Yeah,
excited
man.
to be here.
Excited. It's super. So tell us a little about, before we jump in, just a little bit about who you are, how you got started in insurance, a little bit of background.
Yeah, so I've been in insurance for 15, 16 years now, going on 16 years. Started with, like the way most people get started, one of the big name companies, brand name companies, Farmers Insurance. Got a lot of great experience there. Farmers, I found, I'm going to knock this mic all over the place, by the way, because
Yeah,
I talk with
it's
my
all right,
hands,
we'll pick
but
it up.
I'll deal with that. So Farmers, they have you doing a lot of different types of insurance. You're doing personal, you're doing some commercial, you're doing life. I had a financial services license. So I got a really quick exposure to a lot of different types of insurance, and I enjoyed that. I got the spectrum, but I always knew, you know, I wanted to, instead of going a mile wide and an inch deep, I wanted to go a mile deep and an inch wide. I wanted to be a specialist in something. So that's what we, 7 years of building an agency there, and then ultimately we gave it back to Farmers. We said, hey, we're going to go do something else, and we left and started Pacific Premier Insurance, and that's an agency focused on, at the time, I thought we would just focus on property and casualty. So we'd have a commercial division and a personal division. I'd seen that model work for other people, and so that's what I wanted to emphasize. And so we've been doing that for 8 years. And, transparently, one of the things I learned during that time was even within those disciplines, it helps to have a niche that you really focus on. Because in the property and casualty world, a veterinarian is not the same as a roofer, is not the same as a CPA. They all have very different concerns that keep them up at night. So they have different insurance companies that cater to those, different applications, different questions, different marketing resonates with them. So when we were trying to do insurance for all those different types of groups, it was a little bit bumpy and chaotic for us. And then COVID happened, and we thought, hey, marketing's changing. I can't get in front of these people the same way that I used to be able to. What's always been our focus? What's always been our niche? What's always worked for us? And we put that all on the table, and we just said, hey, we really like real estate. I like real estate personally. Yeah. I just think that it's a fun industry. It's essential. And so we were trying to think, okay, that's always worked for us. Let's focus on that for a while and just see how it goes. It's an experiment. And ever since we've been focusing on that, on the personal line side, that's residential 1 to 4 units.
Yeah.
And on the commercial side, that's everything from, real estate syndicates to property management groups to adjacent services. So everything to do with real estate. And we've just been having a ball doing that. And it just happens to be that the marketplace is so crazy right now in property internationally, but in California in particular, it's kind of like the epicenter almost. that we find ourselves in higher demand than ever before.
Yeah.
And we're just really excited to be doing what we're doing and helping people.
Yeah. How's it feel to be in an industry where traditionally, like property management, there's not too much exciting about it unless you make it exciting, to be like the cool kid where people want to actually talk to you and learn more about what's going on? Because it's funny, insurance is kind of this thing that you kind of just need. But what's been going on in California over the past 12 months, I guess, has just been crazy, where people are losing coverage. They can't get coverage. Coverage is, 3 timesing the cost. So tell us a little bit about what's been going on in California.
Yeah, definitely. Well, it's been sort of a shock to us too. I mean, again, doing this 15 years, I've never seen we call it a hard market. I've never seen a market this hard. And I have, mentors and friends in the business that have been doing this 40 years. They've never seen anything like this.
What do you mean by hard?
So a hard market means that there's not a lot of negotiating leverage on the side of the consumer. It's kind of being driven right now by the carriers and insurance companies. I say that interchangeably. And one thing I want to say too is just, I'm going to try to keep this at a 40,000 foot view, because I don't want to get too wonky. But if you want to dive down into anything that you think your audience would be really interested in, let's do
100%.
that. So what's going on in the insurance market right now is insurance pricing is created by insurance companies in a conversation with insurance regulatory bodies.
Okay.
Nobody can create them on their own. They have to compromise a bit there. What the inputs are that are causing pressure on rates going up are general inflation that we're all aware of now, right? So when a house burns down, the cost of wood, the cost of nails, the cost of contractor labor, their gasoline to get to the job site, all these different things have gone up, right?
Yeah.
There's also the cost of reinsurance. And this is insurance that insurance companies buy.
Which I had no idea about, which is very interesting.
Yeah. So they buy insurance also so that if they have a catastrophic loss, they don't go insolvent. They can pay all the claims and keep going. So we have those two inputs. Then we also have an uptick in weather events that we've been all hearing about.
Yes.
More fires in California, more hurricanes in Florida, freezing events in Texas that had never happened before to the magnitude that they are. We just had a named storm hit San Diego.
Right, the
Hurricane Hillary.
Yeah.
So all these things are kind of happening at the same time. And then there's also social inflation that's happening, which is sort of the concept of increased litigation and increased judgments as a result of that. So it's sort of created the perfect storm of things that would buoy or lift insurance rates. And then so that had caused, because rates hadn't been able to keep up with them, again, that's that conversation that's happening with the insurance companies and the regulatory bodies.
Yes.
That caused an imbalance. And so the property and casualty insurance nationwide has been unprofitable.
So what is casualty, by the way? Explain that.
Casualties like litigation, lawsuits, and that sort of thing.
Okay, perfect.
Yeah. Property and casualty.
Property and casualty. Okay, perfect. So these insurance companies have to have their pricing approved by these regulatory agencies in California.
Yeah, correct.
That's correct.
Yeah.
Okay. And that was part of the cause you've stated of why insurance rates went so high and why some insurers are leaving California. Is that correct?
Right. So, and to expound on that a little bit, so the other thing that's happened is the interest, as a result of inflation, they've increased interest rates. So now you have this liquidity whoosh that was there. You could have gotten historically a great return, or a normal, stable return on investment in the insurance industry. That's not happening now. But hey, I can take my money down and get government bonds, and I can get a great return. So all of a sudden, the amount of money that's there for insurance is not as significant, and that's driving capacity problems. We don't have enough liquidity in the market to really insure everything.
Wow, that's fascinating. You just unpacked a lot of factors that I hadn't really thought about. So we have the insurance regulatory bodies limiting. So we have that in property management. And is this like a good analogy where in property management for apartment owners, you can't raise the rent more than 10% right now?
Mm-hmm.
Is that similar, like where they're having these discussions with these regulatory bodies?
Yeah, actually in California, if an insurance company submits a request for an increase that's over 6.9%, historically that's gone to consumer regulatory agencies. And then when that happens, anything can happen. So there was There was a situation a decade or so ago where State Farm asked for 10. They just rolled the dice and said, we're not going to stick with 6.9. We're going to ask for 10. And they got negative 10. So that 20-point swing
They got like slapped on the wrist for
was
that.
a big deal. I mean, they made it really tough for them to write in California for a while. So that's why you're seeing insurance companies say, look, if we don't have the capacity, meaning we can't write this to begin with, and it's not profitable when we write it right now, why don't we just leave the state temporarily until they figure this out? I don't think any of this is necessarily permanent, but I think they're making a statement saying, hey, until this gets resolved, we're just not going to participate. And that's causing a lack of competition for your business too.
Right. That's super interesting. So you're saying farmers asked for 10 because they have to ask.
State Farm, yeah.
State Farm. Asked for 10. They have to get approval. They got negative 10.
Right.
So not only did they not get 10, they didn't get 5 or 2.
This is a long time ago. This is not related to the issues now, but
it's not?
Yeah.
Okay.
This was like a decade ago, as I understand it.
Okay. And is State Farm one of the carriers that have left California for casualty?
They haven't left California, but they've stopped writing new business. That was the big headline this year was because of everything going on, they said, hey, we're just going to stop writing new business.
Okay.
So it's been paused since I think August, and we'll see what happens. They might come back with the new calendar year. Capacity for insurance companies is sort of based on a calendar year.
Yes.
So we might see things change in January. We were really worried at the start of this year about knowing that capacity was an issue, what Q4 would look like.
Yeah.
So a lot of our time was spent working with clients to try to prepare them for the end of the year.
Got it. So we had these conversations with regulatory bodies. We had reinsurance rates going up due to weather events, just the cost, inflation costs, social inflation, increased litigation, probably around weather events and things like that in large part.
Well, that and there's big money in litigation. So we're seeing private equity come into finance litigation.
Tell me more about that.
You can make money if there's a good case, like a heartfelt case. You can finance and bankroll a lawsuit.
Wow, doesn't seem right. Okay, interesting. So those things happen. What really jumps out to me is, like, let's say that State Farm story where these insurance companies, I know Farmers has to do it too, have to go to the regulatory body and ask for price increases. And I don't know a lot about it. You'd know more than me, but I imagine these price increases aren't just, they're like, oh, we want to raise prices for no reason. It's usually like, hey, didn't a couple big companies lose tons of money like the year prior? Like, talk to me about why they asked for these increases and what part of the story or the pie, so to speak, are these increases when they ask for them? What part of the issue is coming from the regulatory bodies, meaning like they made potentially bad decisions with not letting them raise prices to a rate that, they need to be profitable?
For sure. Well, I mean, just disclaimer, I'm not in those rooms. It's above my pay grade. I'm not an insurance company or an agency, so we contract with them and we work more with our consumers to get insurance from the carriers. So I have some insight, but not a whole picture.
Are you not allowed to speak poorly about insurance
No, I'd say whatever I'd say whatever I want. And by the way, on that point, look, there's a political aspect to this too.
Yeah.
So
definitely.
I would say, like, I've been known to make an off-color joke here and there about, but I think that's part of being a politician. Like, you get to take those punches.
It's not real talk.
Yeah, but look, what I'll say about Sacramento and everything like that is I'm their biggest fan. Sincerely. Like, I really want them to do well. I want them to get this right, and I want them to right the ship because we're all in this together.
Yeah, they represent us.
Yeah, I really want the department and the commissioner and everything. I'm really rooting for them. And I'm also really rooting for the insurance carriers themselves, the insurance companies themselves, that they get it right and get it together, because we have to work together on this. But that's probably 2% of my focus at the end of the day.
Okay.
Because I don't have direct control or direct access to that. What I have direct control and direct access to is how I run Pacific Premier.
Yeah.
And so that's what I show up every day focused on. And I feel like I'm working my butt off right now, which is good. That's what I want to be doing. And I'd be remiss if I didn't say, my staff is totally working their butt off. I mean,
yeah.
I'm so impressed with what they're doing every day. They're showing up in a really tough environment where people are really upset and don't understand what's happening, and they just are doing their job, and they're doing it with a smile on their face. We talked about the Ghostbusters before. I'm joking with them that they're the Ghostbusters. They're doing the dirty job that nobody wants to do. It's Halloween right now, so it's a timely, conversation joke to have with them. But they're doing the job that nobody wants to do, and they should be very proud of themselves.
Got it. Okay, so you had mentioned at the beginning about dealing with a lot of drama as an insurance, company owner, especially under these situations. Can you unpack that a little bit? Because when I think of insurance, I don't think drama generally, but what do you mean by that?
Yeah, you think that insurance is like a tranquil, lake, but it's like that image of the duck sitting on the tranquil lake. Underneath, there's all this churning of legs and everything like that. Yeah, right now this is a very dynamic market because there's been these really quick changes happening. There is a disagreement between, I think, carriers and insurance companies and regulatory agencies about what the future looks like.
Okay.
And how we should be pricing insurance. So, and part of that's, are you looking forward? It's called prospective rating. Are you thinking about, hey, we're seeing this exponential curve in terms of weather events and losses because of these big fires? Or should we only be able to look backward retrospectively? So the reinsurance companies, for example, they don't have to play by these rules. There's nobody protecting the insurance companies' pricing. The consumers are protected, but insurance companies aren't.
Okay, so there's no regulatory body overseeing them.
Not protecting them. They're big bad insurance companies. They're allowed to. We can. We're gonna have a soft spot for them.
Sure.
But the reinsurance companies are all using prospective rating. They're all looking out over the horizon line and saying, okay, this is what it's going to look like because we can model this stuff. They're all showing, okay, we need to raise rates significantly to make sure that we stay solvent.
Mm-hmm.
There's only so many big reinsurance companies in the world.
Right.
So they're changing. They're going that direction whether we go or not. The insurance companies cannot do that without approval. And so and that's where the disagreement, a big part of the disagreement, I think, lies. There was just good news that they've come to some sort of, a compromise where insurance companies can potentially use some of the tools and the things that they want to use to make sure that they can rate adequately for different scenarios. But there's also there's a give and take to that where they have to take a lot of fire areas if they do that.
Yeah.
So it'll be interesting to see how that plays out, and it will probably play out over a decent amount of time. I'd say a few years before we really understand what the impacts that'll be.
Yeah, this is really interesting because traditionally a lot of this would just be like glazed over eyes or minutia or like insurance 301, like an advanced behind the scenes insurance class. But I'm very interested, and I know a lot of people are very interested because we get very interested when our rates triple.
Yeah.
You know what I mean?
Yeah.
Then we start wanting to learn how things work and understand what's going on. And so I'd like you to unpack a little bit more about the looking back and looking forward. And I think you had told me actually like a story about maybe one carrier or something where it seemed very reasonable where they needed to look forward, basically rate or price their insurance based on what they think is going to happen this year, but they had to do it based on what happened last year. But what happened last year wasn't indicative. Like, tell us more about how that works.
Yeah, I'm not sure what story exactly we're referring to, but look, there's some good examples of where this has happened before. Florida is a really good example of the situation where we can kind of read the tea leaves a little bit. So they had a couple hurricanes in 1 year. We said, okay, well, that'll never happen again. That was a one-off. Look back at the past, that hasn't happened. The next year they had 5 hurricanes or something like that, and it was the biggest loss in a year. So, and overnight, as a result of that, they have a similar state-run insurance exchange. We have the California Fair Plan for fire risk in California. They have Citizens in Florida, which is, just swap out the word fire for wind, and you basically are there with what their plans include. That became like 49% of the market. As a point of reference, California might be more than this now, but last stat I heard was the California Fair Plan went from 1% to 2% of the market. It's not even close, but it's still a problem.
Yeah.
Because California is a really big state. I think there's something like $220 billion in liabilities in the California Fair Plan. So, but I think, we can also Florida has gotten it together a bit as well. So consumers are more savvy to this. Carriers are slowly entering. That's why I say I think it'll be a long time where we're kind of recovering from some of this.
Got it.
But we can draw some good lessons on what they did over there to kind of help us through navigate this as well.
Got it. Okay, so I'm not quite understanding. Unpack a little bit more with insurance companies can only look back when so they can say, okay, we've had these losses over the last 5 years, so this is our pricing this year. They want to start looking forward, but isn't that kind of looking forward? When you look back, you're making a guess about the future. What am I missing here? How does that work?
They're just, what they're seeing is an increase in these weather events that's sort of kind of exponential. And so the one argument is you can only look back at what's happened in the past, and they're saying, well, the past really isn't that indicative of what's going to happen going forward. That's kind of and that's why I bring up that Florida story, was because they said that year was an anomaly. It would not happen again.
Got it.
There's too many hurricanes that year. That was just a bad year. It happened the very next year. So we're seeing changes, systemic changes, and we're trying to keep up with. I mean, it doesn't, you just look at the fires. We talk, and this is where I get wonky a little bit. We talk about frequency, the number of times something happens,
right,
and severity. How bad is it when it happens? Well, both those things, when you talk about fires, it's off the charts now as it was 20 years ago.
Yeah, definitely. So I see a big increase in weather events. If you're looking back historically, you're not going to be prepared, but you need to kind of have an assessment and say, okay, this is happening at a higher rate. We need to be able to forecast that projection happening potentially. Okay, that makes sense. So with all these events that happened, created a perfect storm for insurance. Certain carriers just said, hey, we disagree with kind of the insurance regulatory agencies because of these other factors. We can't write. We're not going to write in this state anymore, any new policies. And that ended up hurting the consumer a lot. And not all of it was the regulatory agency's fault. There was other factors. But it seems like a portion of it was maybe some things they need to work out with this, looking back and looking forward. They're talking, everyone wants people to have fair insurance and enough competition. What's happening when someone gets an increase that is through the roof and they call you? Like, what's a common conversation you're having around insurance right now?
Yeah, it's a good question. We try to lay the groundwork as much as possible up front. So we're trying to let people know, hey, this is where the market is. Expect certain increases. But the real challenge here too is that some people are very disrupted by what's going on, and some people are not disrupted at all.
How so?
This is not happening evenly across the board. So for example, if you're in a high fire risk area, you might be way more impacted by some of this than someone who's not. So we're seeing some people get more of the short end of the stick, and we're trying to take a really big book of business that we look at, 120 days in advance of renewal, for example, and we're trying to really project out and predict what's coming so that we can get in front of that and communicate to clients in advance, lay that groundwork, because it takes a little bit of the pressure out when it comes, and that's most of what we can do. Now, if somebody has a big rate increase, we're blessed. This is how our agency functions, is we're able to go out and look at other options.
Because you're a broker.
Exactly. We act in an agent and broker license are the same in the insurance world, but we work with many different carriers, is what I'd say. So we work agnostically. We're trying to find the best deal for our clients at any given time from what's available to us. And we'll go out to market. We'll look at these things. But the problem too right now is that there's just not a lot of. It's a pretty frozen market. That's where it's a hard market. There's not a lot of competition with carriers wanting to take risk. So, sometimes people are having to eat those increases. That's the market responding to inadequate ratings and lack of competition.
Yeah. And how does that work if a consumer comes to you, like let's say it's a renewal and they're not writing anymore and the new policy is 2-3x the cost, and they're like, oh, Erik, I like you, but I'm going to, have to look around a little bit, talk to another broker or something. What do you tell people, and what's like the behind the scenes look at that for the consumer?
The behind the scenes for what we're saying behind the scenes,
or
or what they're doing. I don't know.
Yeah, like how do you talk to them? Do you tell them, yeah, go ahead and go look, or do you tell them like, you can look, but you're not going to find anything because I've already looked? Like, do people find policies that maybe you don't see, or like how does that work?
I think it's a totally fair question. I think it's for them to ask, and I think what we try to do is show our work. So we have marketing results and that sort of thing. We have a document that we'll put together and show them, okay, look, here's who we approached, here's what they said. Right now in this market, it could be this sheet that's 30 carriers long that just says decline, 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 and then a couple that are just they're willing to quote, but it's not going to be competitive.
Mm-hmm.
So, and that's at least we're showing our work in that instance, but it's not, it doesn't make it feel any better, because you're still stuck in the same position. I'm fine with, if someone wants to go get all alternative quotes. I just tell you, like, interview your broker, find someone who you really like to work with, who you think, understands your situation, your industry. That's why I think niches within insurance are so important.
Yeah.
Sticking in your wheelhouse and really because we know exactly what the markets are that are playing in these disciplines. Every once in a while we get surprised, but I think that's a great day too, because then we just learned something new that we didn't know yesterday, and we are even tougher for the next time we go back at it. So yeah, I think that's all they can do that if they want. I caution anyone from wanting to become an insurance agent. Not if you want to do that as a career, but if you're like a property manager and you're doing a really good job, like spending your time focusing on insurance is probably not the most productive use of your time. And if you're a consumer that has homeowners insurance, again, just find someone who you trust that you think is going to do a good job for you. Ask good questions like you're doing, and I think that's the best that you can do in this market. And be a good consumer with insurance companies too, because there's something to be said for having a good track record with these companies when they're going through this.
Yeah.
There are groups that might come in and buy the market knowing that they're going to raise rates significantly in the future, and do you want to sacrifice a really good stable carrier for something that may be here today, gone tomorrow, kind of thing? So you got to weigh all those things, I think, and it's really challenging for consumers. So I think trust your agent.
Perfect. So I'm trying to get in the head of one of our customers, one of our clients, even myself. When you get a big increase or something, you talk to your insurance agent, and then you're like, okay, well, maybe you have a good relationship like we do, but maybe not. Maybe it's just like you got it online and now you're looking around. What's the difference between like a broker and an agency? Like, are there some carriers you can't write because they're exclusive to their agents? And like, how does that work?
There are. So like when I was a farmer's agent, that's a captive insurance company. So I was mainly focused on writing farmers insurance only. And likewise, like other brokers didn't have access to those companies. So there are a handful of those companies out there. We work with, somewhere in the neighborhood of, 400, 1,000 companies. It's like a lot of, depending on how you quantify it, it's a lot of different insurance companies that we work with. I think that's a big advantage to working with someone like us.
Yeah, like
agent and broker. I'm sorry.
Yeah, agent broker.
So I was going to just mention, because you're in real estate, so real estates have agent broker license too. They're different licenses, and they imply different things. On the insurance side, when you get an agent and broker license, it's the same license. So everybody gets that license. What agent and broker really means is the capacity that I'm going to the carriers with. So if I have a direct relationship with, say, Travelers, for example, I'm an agent of Travelers, even though you can call me a broker, you can call me an agent. It doesn't really matter to me. When I work through a wholesaler with a company that maybe doesn't do direct appointments with agents, or they're not admitted to do business in the state of California, which is something we should probably talk about, admitted versus non-admitted. That in that case, I'm working as a broker because I'm working with a middle person in between us.
Got it. Yeah. Let's unpack that, admitted versus unadmitted. Why should we care about that?
That's something that I think, for those consumers that are going to be disrupted by this market, I think that's going to be something that they become more familiar with. So admitted means that they are going through the compliance of those regulatory agencies in California. The interesting thing that's happening now is we're seeing more and more circumventing of California in general. They might just produce a product that is a non-admitted product, meaning it doesn't go through those bodies at all. And there's some just important things that consumers would want to consider when we write non-admitted policies for people all the time, if that's the best option for them. But we just need to be very disciplined about looking at certain provisions in the policy, because it's more like the Wild West.
Got it. So you could have a claim, and because that's the thing, people just look at the price with insurance, but those of us who have actually been through a claim, that's when you actually start to care about the insurance company. And so what you're basically saying, it sounds like, is an unadmitted carrier hasn't gone through that regulatory screening, so you don't really know what you might get. But in some cases, that policy might make sense because they have a good reputation elsewhere, and it's the best option.
In some cases, that's all that's available.
That's all
so
that's
we
available.
Really want, we really that makes the most sense. But yeah, you want to really, the devil's in the details.
Yeah.
There's a lot less consumer protections, and so I think that there will be more of a, to your point, I think the average consumer looks at two lines. They look at the price and they look at the deductible. At least in my experience, that's what people are focused on. And there's a whole, I like to try to focus people on a few more important details that that we need to factor into the decision.
What's up with HOA insurance? That was kind of like the tip of the iceberg, I think, with news. I remember one of our clients, I forget who it was, I apologize, but he actually tipped me off to it. He's like, hey, you should look into this. We have this HOA and we can't even get insurance. And I was like, what? And I looked it up. Anyway, what happened with that, and where are we at today?
Yeah. So I have a quick story on that too. We got called in by a friend who's a lawyer who's in an HOA, and they said, look, Erik, we're really in a dire place here. Our HOA, we have 300 or so units. It was $130,000 last year. The renewal came back at $2.5 million this year. And that wasn't even for the amount of insurance. That was for about a third of what they needed to actually cover the Homeowners Association. So, and it's a terrible situation to be in. We went to a couple of their association meetings. We talked to them about, hey, I think this is what you should be thinking about, and that sort of thing. The reason why homeowners associations are in such a challenging position is back to the capacity question that we talked about. So in that case, we needed $130 million worth of coverage to cover the master policy. So not the individual condos themselves, but the whole common area.
Okay.
And right now it's really tough to get up to, higher limits. That middle market of insurance, middle market of for real estate is really challenging. We might only get, up to 20 million for the base layer of insurance, and we have to keep stacking insurance carriers and layering insurance carriers on top of that. It looks like, this is really wonky, but it looks like a quilt when you look at these things on paper for how wholesalers are piecing together insurance contracts to try to cover these, to try to get to the coverage amounts that they need. And the pricing for each one of these layers is absurd right now.
Got it.
So we have a joke right now that in the industry, like the 1 comma club, because some of these carriers are only offering 1 comma worth of coverage, or we haven't even broken $1 million yet, and we're trying to piece up to $130 million. It's going to take a while.
Wow. So it's a quilt of different insurance policies, sometimes potentially. And why did they get hit hard? Is it mainly because they're in fire risk, or did some HOAs just see those increases and they're just in a normal street with not a high fire risk?
They were in a high fire risk area.
Okay.
Their carrier was decided to non-renew, and so that was then the next option that agent had brought to the table. What we did in that case when we came in, we really didn't do much. The Homeowners Association and that attorney did all the work. We just were there to kind of explain what we're explaining right now, kind of go over the realities of the market and why it is the way it is. But what they did was they changed the CC&Rs. They changed the CC&Rs to say, hey, now you do have an insurable interest on the building itself. And they were able to do that because the HOA was structured in such a way that it actually lent itself pretty well to do that. And so that made it so that the Homeowners Association policy went from needing $130 million of coverage to not needing much at all. And all the individual unit owners were then able to go get the coverage for those units, which isn't as difficult because you can get to $1 million in coverage really easy. It's hard to get to $130 million in some instances.
Got it. So you push that or they pushed that kind of on their individual homeowners, but it didn't hurt them as badly as it would have hurt them collectively as an HOA.
By breaking things up, it alleviated the capacity issue that we were running into, which I know doesn't make any sense. Like, why would that be? Isn't it going to Costco cheaper than going to, buying things individually? Not in this instance. It's not.
Well, that's huge, because that could bankrupt people that collectively own in HOAs. And I'm glad that someone came up with it. Sounds like an attorney maybe figured out how to do that.
Yeah, it was a good solution for them in this instance, and it got them off of life support, because you're right, it would have bankrupted the HOA, or there was a lot of voicing of, well, why did they even buy this $2.5 million policy to begin with? Well, if they didn't, then you don't have insurance, and then a bank can't lend on your condo, and then you can't sell your condo unless it's a cash buyer.
Yes.
So it was a significant concern for, and a lot of these people were fixed income. This was their biggest investment of their life. They have $1 million condo or something like that, and what's that worth if they don't have insurance on the homeowners association? So yeah, it was a really interesting case to be a part of, and that's the reason why it's it's so challenging, is just because trying to get to those dollar limits. Again, why some people will be more disrupted than others in this market is if your reconstruction is below a certain dollar amount, I can get coverage pretty easily for that.
What's that dollar amount?
It depends.
Okay.
Depends on the area. It depends on what we're talking about. Yeah. Okay. But if you're trying to get higher limits on certain things, it can be really challenging.
Okay.
Even on the casualty side now, it's begun to affect there as well. Maybe somebody had a $50 million umbrella previously, and right now the most that's willing to be offered is $20 million. So we have to go back and say, look, $20 million costs as much as $50 million. And by the way, I can't, it's really hard to get to $50 million. We can get there, but are you going to want to take it at this kind of pricing?
Cool. Well, that's some great information. Before we get you out of here, what are just some general practical tips for some of our clients? Like, they own maybe one house or maybe a small apartment building, as far as coverage and just things to look for. What can you advise them on generally? Yeah,
so I think the lowest hanging fruit in this way is most people should not want to become an insurance agent in this market. If you want a career in insurance, though, I'd love to talk with you. We really want good people in the industry, and when we're hiring people. But for the most general public that's not trying to become an insurance agent, interview an agency that understands what your issues are, and then work with them. You only need one quarterback. You don't need to have 10 different quarterbacks to call the shots on this. It doesn't help to have 10 different brokers involved. Just find one that you really trust. We can go to different markets and find good price competitive solutions for you. So I would just emphasize that, don't try to. This is really complicated stuff. I've done this for 15 years and I'm still learning every day. And within that, then I think what's going to happen, people are going to become more prudent about when they're filing claims and why. They're going to suss out some more details. And I think that's a good conversation to have with your insurance agent. We never tell people you can't file a claim or you shouldn't file a claim. That's always available if they have a loss. But we might want to do some math on it. We might want to look into thinking, what are the consequences of these different things. Claims filing, like we had mentioned, the admitted versus non-admitted, for the people who are really affected, I think that's going to become more of a conversation. So talking with someone who really understands the ins and outs of these different contracts, so that it's kind of an efficiency thing. We can go through them, and point out what you might want to be cognizant of. I think that's very helpful too. But yeah, just working with a knowledgeable agent and being a little bit more appreciative. If you have a long-term relationship established with an insurance company, that's something you might want to hold on to right now.
Yeah. Relationships are huge. You think there's just an abundant supply of insurance options. Generally, that might have been true in the past, but what I've really appreciated working with you and your company is that you do both the business and the personal, and everything's in one umbrella, and I have one relationship. And when we hit tumultuous times like this, just like last year, if you didn't have, or this year, earlier this year, with all those storms, if you didn't have a relationship with a roofer, you didn't get your roof fixed. And so now is a more important time than ever to have a good relationship with someone. And, they're going to be able to save you time. They're going to be able to help hunt down these, better deals, and, sometimes just explain to you why things are the way they are. So We use Erik. I encourage you to check him out. How do people find you if they'd like to get in touch with you?
Email's the best thing right now because our phones are burning up, and it's that can be hard to get me on the phone. But yeah, my email is Erik at pactmer.com. I'm sure we can link that up somehow or whatever you do.
Definitely. Yeah, we'll put your website. And
I've seen you have good production value on these, so something like that. I'll figure that out.
Yeah, thanks to John behind the scenes.
Yeah, and our phone number too. I mean, you can try to reach out to us by phone, but I think we prefer email right now.
Okay, perfect. Well, we'll link the website. We'll link your contact information. We appreciate you coming in, and thanks for all the info, Erik.
Thanks for having me. Yeah, appreciate it.